me now is Ewalt Kellerman, property analyst at FNB. Ewalt, appreciate your time. Let's kick off with the February building statistics and what we're seeing on the front there. The headline here from an FNB perspective, February building stats, nothing more than vague hints of building activity turning for the better. Can you elaborate on what we've seen over February?
Yes, Bronwyn, we've still seen a lot of pressure in the buildings completed space. We like to look at it on a 3-month moving average basis, and we still see 35% year-on-year deflation. But from the building plans pass perspective, we've seen from 50% deflation to 25% deflation. So although still year-on-year deflation, it's a lot better rate than what we've seen.
It's moving in the right direction.
That's right,
we can put
yes.
it that way. Do you think it's still going to take some time for us to see a substantial turnaround in the building environment?
The building plans completed is a bit of a leading indicator. It still has quite a way before that will start showing in prices, showing in the building sector, and really providing some relief for the building sector. If you look at the building plans completed and you start breaking that down a little bit further, you see that the flats and townhouses dropped by more than 50% year on year in the last quarter, which shows that we've created very big oversupplies in certain sectors. So those oversupplies still has to be mopped up by the market.
Let's talk about the FNB residential property barometer for the first quarter of 2010, and that's a survey of estate agents, ultimately finding out what is happening on the ground in the residential sector, so to speak. So again, give us some color on this front. Is it still a relatively bleak picture?
The residential market has started to show very strong signs of improvement. The barometer survey is a survey to estate agents, the guys that has the ears on the ground and that's at the coalface looking at the customer. They typically see things a lot earlier than what the banks would see the house prices moving, for instance. And out of a scale from 1 to 10, they rated the demand activity at 6.35, and that's more than 30% more than what we've seen last quarter.
Is there a decline in pressure selling as a result of financial stress across the board?
Yes, definitely, Bronwyn. We still have a very big part of the household sector in financial stress. We've seen a lot of rate cuts. We've had some time to work through these issues, but from 24% we've dropped now quarter on quarter to 20% of sellers that sell due to financial pressures.
The luxury residential sector, that seems to have remained relatively unaffected. Would that be an appropriate statement to make given the analysis that you've put out?
Well, I wouldn't call it unaffected. They definitely also felt the pains. They also experienced the same as a market. From a demand perspective, they don't see the same levels of demand, so they're not as optimistic about the recovery. But from a supply side, there's obviously a very big supply constraint with the luxury segment. Properties around Cape Town where there's a land shortage, properties around the major business nodes such as Sandton, those properties still sell for very high premiums. So
it's the constraints, as you say, on aggressive supply side constraints in terms of availability in the luxury sector, only around certain nodes.
Yes, well, it's around certain nodes, and then the higher income has also, they are in a better financial position, and their debt to disposable income levels are also quite a bit lower than what we've seen. The biggest segment is between 500 and 750,000 rand yearly income, where the highest debt to disposable income is. So the high net worth and luxury individual still has a lot of capacity.
And what are the estate agents saying about banks lending in the current environment? Are the taps being opened up?
We have relaxed policy slightly. All the banks in general have moved to 100%. It's still one of the major 3 reasons for positive sentiment in the future is that banks have started to relax their lending policy. So that, together with interest rates dropping and the positive sentiment from the household sector, we have seen the estate agents acting very positively to these relaxations in policy.
The trend from here firmly up, given the fact that we have seen that interest rate relief, and it should now start filtering through to the consumer already. You're starting to see positive signs in this FNB residential property barometer.
Yes, Bronwyn, the FNB house price index is already pointing to 8.6% year-on-year inflation in prices. We don't expect too much fireworks. We don't want to create the perception that it will be the same as what we've seen a couple of years ago. There's definitely some risk still in the market. There's a lot of customers struggling. A lot of the household sector is still under financial strain. While the rate cuts will definitely help with that, there's a lot that we have to work through. The oversupplies, as you've seen from the building stats, there's oversupplies in the market. So all of these positive factors would definitely count for a positive outlook. But there's a lot that we'll have to do to reach a much more positive market.